that kind of lines up with what Tesla said about half of their deliveries for the quarter being in the last 10 days of the quarter, which just sounds like a completely absurd and unnecessary way to run your business.
The Tesla Q podcast is for informational purposes only and is not intended for and should not be used as financial, investment, or trading advice. Research associated with fiscal decisions should be conducted elsewhere. The host of the show possesses no license or credentials to warrant accepting advice based on what is heard on the Tesla Q podcast. Additionally, even though the host and guests may hold positions in companies discussed on the show, they don't have insights into the next time step of the simulation. Therefore, do not make any financial decisions based on the contents of this podcast.
Hello and welcome to episode number 29 of the Tesla Q podcast. This is going to be the final part of the March Madness series, so the finale. It's part 4. The prior parts were episode 24, 26, and 28 for parts 1, 2, and 3. I'm recording this on Friday, May 3rd, which is the day that Tesla has completed their new capital raise of over $2 billion, partially as convertible notes and partially as new shares at $243 per share. Most of the day today, Tesla traded at about $255 per share after ramping up to that level early in the day. I think it topped out at $256.60 something maybe. So obviously that capital raise burns shorty for the time being. It doesn't appear at first glance to actually change the overall business sustainability of Tesla's business model, but that's probably why Elon is pivoting to portray that they're shifting their business model. They're now touting their robo-taxi fleet and how their vehicles are going to appreciate in value and generate $30,000 per year of cash flow per vehicle, which fails to actually recognize that other competing vehicles will be able to undercut the price per mile that they'll be able to get. So the dollar per mile assumption that they've made may not end up coming to fruition. So we'll see what happens with that. Interestingly enough, the prospectus for the capital raise did not mention anything about robo-taxis. So that's interesting, of course. But then there was a phone call yesterday where apparently robo-taxis were all they talked about. So maybe that audio of that conference call will be released later on to prevent a full-on Reg FD violation similar to the February 28th secret conference call. But I guess we'll find out about that. One note also from this past week is that the 10Q came out, which was kind of a prerequisite to the capital raise, of course. And within that, it was included that the April due date for some Solar City bond repayments has been pushed out to June. It had been $180 million, but now it's down to $165 million, and the interest rate on that is 6.1%. So we found out when the 10Q was released on, I believe it was Monday or Tuesday, that payment had been pushed out. So if Tesla hadn't raised capital this week and had actually paid off that bond, their cash balance would have been under $2 billion, most likely, due to accounts payable coming due from cars produced in quarter one and such. So don't forget, if you want to contribute to the podcast, you can become a Patreon subscriber and make a small contribution each month. That's at patreon.com/TeslaQpodcast. Shout out to Captain Future, who is one of my larger patrons. He's actually a big Tesla fan and SpaceX fan, but he appreciates the podcast and appreciates that I am at least mostly fair in my perspective on things, even though I do see things from a bearish perspective when it comes to Tesla. So with all those intros out of the way, let's get back to March Madness. We left off last time on March 14th with the Model Y reveal. So that was on Thursday. So on Friday, March 15th, there were tons and tons of people on Twitter pointing out just how similar the Model 3 is, or the Model Y is to the Model 3, and that they're hardly different at all. There were Photoshop comparisons, side-by-side comparisons and stuff, and there's basically no way without major changes that people who are average-sized adults could sit in the back seat of the Model Y. That's the main takeaway. I probably mentioned that in the last episode. Same day, Friday, March 15th, there was a tweet from Quirky Llama where he had heard that buyers of the Standard Range Plus Model 3 were attempted to be upsold to a mid-range, and apparently if they held out long enough, they could actually get a mid-range Model 3 for the price of a Standard Range Plus Model 3. So that's definitely believable now that we've seen the actual financials for quarter one. Obviously, Tesla had pretty poor margins for quarter one with their negative $700 million bottom line number and their negative $920 million free cash flow. Not a whole lot else happened on that Friday, March 15th, besides all those comparisons of the Model Y to the Model 3. On Saturday, March 16th, Mark Cuban took to Twitter and was defending Elon Musk. It's basically, main point of his tweets were that he was suggesting that the SEC guidance was overly vague and that Elon couldn't possibly be expected to understand what's material or not, which Elon's supposedly a super genius, but he can't understand what material information is. That just seemed absurd to many people in Tesla Q Twitter. But as we've seen with what actually came out of the settlement, apparently that the SEC somewhat agreed with Mark Cuban, as the only thing that came out of the settlement, which was reached the end of last week, I think, was basically just that they clarified exactly what he couldn't tweet. It is notable that Elon's tweeting this week was substantially reduced from prior times, and it appears that he may actually be complying with the more well-defined settlement that they reached. So, for better or worse, that is now the case. There was one Twitter user, Mother Cabrini NY, or Mother Cabrini Praise, and that's praise with an E. They suggested that Mark Cuban's exchange may have inadvertently showed that Elon was shopping around for funding amongst the Billionaire Boys Club. As we saw, since he actually got funding this week, maybe that was the case, maybe not. Sunday, March 17th was mostly quiet. Nothing notable happened that day. Monday, March 18th, Tesla asked employees to help volunteer to help with deliveries. In the email that came out, I think they said they had 30,000 cars to deliver in the rest of the quarter, and that was on March 18th. So that kind of lines up with what Tesla said about half of their deliveries for the quarter being in the last 10 days of the quarter, which just sounds like a completely absurd and unnecessary way to run your business. I don't know if they're hoping to do something similar at the end of June. Maybe they are. Can they actually achieve it? I have substantial doubts, of course. I guess we'll find out. Monday, March 18th, Brad Buss netted about $5 million with his 10b5-1 options exercise and sales. On Tuesday, March 19th, Jim Cramer was on CNBC, and he was talking about Elon Musk and basically said that Elon Musk was making a fool of Judge Nathan, and that later prompted some responses from Elon, which has carried on even into this week, where Elon tweeted something at Jim Cramer about being a fake or something, and then Jim Cramer had a little clip where he was pretending or actually had been upset that Elon suggested that he was a fake and mentioned his father and all sorts of stuff. It was a very, very odd clip. I can't really describe it in full detail. Just go watch it if you're interested. That was the same day that Tesla Tesla, the company's Twitter account, put out a tweet that said, due to unusually high volume, Tesla was unable to process all orders by midnight Monday. So price rise has been postponed to Wednesday, the 20th at midnight. So that seemed very absurd, of course. This company that supposedly has the best battery technology in the world and was able to take hundreds of thousands of pre-orders for the Model 3 or deposits for the Model 3 back in 2016 can't handle the website traffic on Monday, the 18th of March, 2019. It's a little questionable. It made it seem more like the price rise threat was more of a sales tactic. And that sales tactic was repeated with this full self-driving or autopilot price rise that Elon had threatened to occur after May 1st, which has now been delayed to May the 10th, I think. So, used car salesman gonna use used car salesman tactics. Ironically enough, that tweet from Tesla came out right as Tesla's share price was hitting 263. It fell to that point, but then after that tweet, it melted up to about 275 by the end of that week, Friday, March 22nd. On that same Tuesday, March 19th, Barclays came out with a $192 price target for Tesla's shares. Also, there was an article that day from Laura Kolodny about the various lawsuits and investigations related to Tesla. That was it used information that's been assembled by Plainsight. I think that was the same day that the Theranos documentary came out on HBO. Might have been the night before. There was also the 2020 special that was the Friday before that about Theranos. On Wednesday, March 20th, things were mostly quiet. On Thursday, March 21st, Elon tweeted a link to a Wikipedia page of Jim Cramer, and it was directly to the part of Jim Cramer's Wikipedia page that mentioned manipulating prices by creating a level of activity beforehand, which ironically enough is what Elon Musk did on May 7th, 2018 with his pre-market purchases. And Sheeple Analytics pulled the price data from that day and cross-referenced and was able to deduce that Elon's purchases that day were in fact in the pre-market. So that was pretty ironic. And also of note in regards to that, May 4th, 2018, so 364 days before I'm recording this right now, was when Elon tweeted a warning that the short burn of the century was about to happen. So May 4th, he made that tweet, and May 7th, he made pre-market purchases to boost the share price. I'll be interested to see the Form 4s that come out in conjunction with this latest capital raise. Won't be surprised if he ends up having purchased more than $25 million of Tesla stock. Anything above the $25 million would have been open market orders as opposed to this new issuance that just went out. On that same Thursday, March 21st, there was news from some Virginia transportation officials who had visited the boring tunnel out in California. And they said, this was a quote from one of them, "It's a car in a very small tunnel." And they ultimately declined to pursue the boring company's technology, quote unquote, any further. There ultimately was also a GQ article about that decision by the Virginia transportation officials. Same day, the Alvarez and Marsal jet was in Van Ness, which is the home airport of Elon Musk's G650. Don't know anything else about that. With Tesla's capital raise, obviously they're not in imminent danger of bankruptcy for at least a quarter and a half, maybe. That same Thursday was when they brought back the referral program, and in conjunction with that, there was 1,000 miles of supercharging was one of maybe the only thing that you definitely got as part of the referral program. And I actually just learned earlier today that until May 28th, there's a $5,000 or 5,000 miles of supercharging referral thing available. So yet another sales tactic, I guess, to try to pull some sales into May to try to have much better numbers than quarter one, I guess. There was also a Shorty Air Force sortie that day that happened to fly over Lathrop, and Machine Planet was able to take pictures of the Tesla facility there, and he happened to notice in his pictures that there were many, many empty car carriers that were just chilling in Lathrop. They weren't being used, which presumably those are from the company purchase that Tesla made, which seemed to just be maybe a CYA purchase so that Elon's prior statement about purchasing trucking companies would not be easily proven false. The next day, Friday, March 22nd, Elon flew to Flint, Michigan, and he spoke to a group of kids there and donated some Chromebooks and I guess maybe did something with the water, or I know he's planned to do something to help with their water issue. Someone on Twitter pointed out that was a donation of well below $1 million, which for someone who has paper net worth of $20 billion is quite a small percentage. Also on that Friday, the 2025 Tesla bonds, which originally yielded 5.25%, I think, their spread spiked up. So that's the spread between those bonds and the U.S. Treasuries. I think the 10-year Treasury is what's used for that. So that spiked up. And attempting to be silly on Twitter, I tagged Ross Gerber and Galileo Russell and asked if they had any thoughts on the bonds. And Ross responded by asking where he could buy some. And that ultimately led to him saying that he would buy those all day after I pointed out that they had an 8.3% yield to maturity. And many, many folks responded to his tweet. I've actually pinned the tweet that he responded to of mine in case anybody wants to go back and read the replies. I think there was 46 replies to Ross's tweet, and if you want to be entertained, you could go read those. And here, just in the past week or so, I've started referring to those 2025 bonds as the, quote, Ross bonds. So if you see me tweet about Ross bonds, I'm talking about the 2025 Tesla bonds that originally yielded 5.25% that in recent times have yielded above 8% as on a yield to maturity basis. That same Friday was the day that I set up my Patreon account, which is at patreon.com/TeslaQ podcast. You can become a contributor. I do occasionally put up some premium content for my patrons, so become one if you want to see that or hear that. Also on that Friday, March 22nd, there was some sort of article that mentioned that there was a police report regarding that Davie crash where the doctor died. And the police report said that the vehicle had been traveling at the speed limit of 50 miles per hour. I know original reports related to that had suggested that he was going 75 miles per hour or 80 or something. So I don't know what the true case was, but apparently there was a police report that said that he was traveling at 50 miles per hour. Saturday, March 23rd and Sunday, March 24th were mostly quiet. Nothing major worth going over again here. Monday, March 25th, the SEC put out a reply letter in the whole contempt matter. And on that same day, it was deduced by me and a couple other people's discussion that Solar City leftover bond of $180 million would be due by April 30th, which was this past Tuesday from when I'm recording this. And I mentioned earlier, it got rolled out to June and is now paid down to $165 million. So of the 2 point whatever billion that Tesla was able to raise today, I guess they'll be able to send $165 million of that out the door in June to get that Solar City bond off their books. Tuesday, March 26th was the day that Judge Nathan put out a letter or ruling or whatever calling for oral arguments on April the 4th, which was a Thursday, which happened, of course. There were several people that were in the courtroom to see the arguments and everything. That same day, Tuesday, March 26th, there were some lazy headlines that mentioned that there had been a dismissal of a securities case against Tesla and or Elon Musk, which was actually referring to the Wachos, however you say it, case. But I think a lot of people probably got confused and thought that they were referring to the contempt matter that the SEC was pursuing, which of course was settled last week, which I'm sure helped with the ability to raise the new capital today. On Wednesday, March 27th, the main thing that happened was that Elon Bachman's Twitter account was suspended. That was directly after he posted a link to the listing of all the deaths that have occurred related to Tesla vehicles, whether they're pedestrian deaths or driver deaths or passenger deaths. A lot of the Tesla bulls pointed out that many of those weren't due to autopilot, which the list didn't say they were due to autopilot. But Elon Bachman's Twitter account was reinstated the next day. One of my episodes was a fairly short one where I talked about that a lot more, so you may have already listened to that. On Thursday, March 28th, EV Defender pointed out early in the day that J.B. Straubel was likely selling some shares that day, well before his Form 4 for those sales actually came out. Thursday, March 28th was also the day that Lex Friedman started touting that he had some kind of update to his autopilot research coming out the next week. Later on, of course, Lex interviewed Elon Musk on his podcast. The tweet from that March 28th day that I had retweeted has been deleted for some reason. I'm not sure why it's been deleted. I should also note that Lex is going to be on the Joe Rogan podcast next Tuesday, May 7th, which is interesting. It's interesting that that him as the autopilot researcher is going to be on Joe Rogan's podcast. It's also interesting that ARK Invest with Tasha and Kathy Wood had Elon Musk on a podcast, and they've been touting the autopilot advantage that Tesla claims to have and the robotaxi business model. So there's kind of some interesting connections and access to some pretty high up people if you consider Elon Musk to be a difficult to get in touch with person. But of course, Elon was on the Joe Rogan podcast. Just this past week, Rich Benoit of Rich Rebuilds was on the Joe Rogan podcast. And now Lex Friedman, who's an autopilot researcher, somehow affiliated with MIT, is going to be on the Joe Rogan podcast. So just some interesting connections there. I'll also point out that Lex had blocked the NVIDIA Director of Research, Anima Anandkumar, after she had urged him to avoid artificial intelligence media hype and to publish in peer-reviewed journals. So for whatever reason, Lex does not publish in peer-reviewed journals. I don't know why. I haven't actually looked deeply into Lex's research, so I don't have an opinion on it necessarily, but I do have suspicion that he may be a bit compromised by his Elon Musk fandom, which is fueled partially by the photograph of Lex holding not a flamethrower. So he appears to at least be a bit of a fan of Elon. And late in the evening on Thursday, March 28th, there was a Form 4, as J.B. Straubel did indeed exercise some options and net a nice payday that day. It's been speculated that JB may not be with Tesla for very much longer. As was noted in the proxy statement that was released 2 Fridays ago on April 19th, there are 4 Tesla directors that are not going to be seeking re-election once their current terms expire. And of those 4, 3 of them have been on very aggressive plans selling their options as they're already vested options, that is. That's Antonio Gracias and Brad Buss, who had been the CFO of Solar City. Also, I think Linda Rice Johnson has sold when her options have actually been in the money, but I think her strike price is like $320, so she hasn't made any sales recently. Her last one was for a net gain of $731. So those are 3 of the directors that are leaving, and the other one, I forgot who the other one is off the top of my head, but JB Straubel has been on a very similar 10b5-1 plan, which was started in November. It very, very closely mirrors the plans of Antonio Gracias and Brad Buss. So it's been speculated that JB Straubel may not work for Tesla for too much longer. Back to the timeline. On Friday, March 29th was the first time that I'd seen any tweets from Carlos Aranda about Tesla. He's a Tesla worker who apparently got hurt on the job and has had some issues with getting Tesla to actually pay for workers' comp. There was a GoFundMe back in April that raised some money to help him with that, which was a nice precursor to the GoFundMe, which has raised over $115,000 to help Skabushka with his legal battles against Tesla that are upcoming. On Saturday, March 30th, there was a post on the Tesla Motor Club forums, which included someone saying that they were glad to know that Tesla could sell vehicles at lower prices and still make a profit, which when I saw that in real time, I retweeted it and commented, this word "no," it's do you actually know what it means? And in light of the actual financial results for quarter one, it's pretty clear that Tesla was not able to sell vehicles profitably at that lower price point, along with producing more vehicles than they could sell and having a bunch in inventory. It all added up to a nice negative $920 million free cash flow number, which would not have been sustainable for much longer without the capital raise. On Sunday, March 31st, is when I first became aware of the Ben Baller video where he was trapped in his Model X. And one of the first things associated with me finding out about that was a Tesla bull calling us idiots and saying, this is the actual Ben Baller, and posting a picture of someone who clearly was not Ben Baller. So that was fun. Ben Baller actually had made a Tesla ring for Elon Musk. I think it was valued at something like $35,000. So about the price of a lower end Model 3. But Ben actually has a child who has asthma. So he was very, very concerned about his children being in the vehicle and possibly getting trapped and not being able to breathe well. So I think he said that he wasn't going to allow his children to be in the Model X anymore. I think he may have even broken the lease for that Model X. So that same day, Sunday, March 31st, there was a picture and video of a Tesla semi which was hauling a whopping 4 Tesla vehicles. And that with the video and the photos of that, there was a little bit of an issue where the Department of Transportation sticker may or may not have been photoshopped on in the pictures, and it didn't show up in the videos. The Tesla Bulls, of course, tried to say that because the video was like 480p, not 720p or 1080p, that it just simply didn't show up due to the low resolution. I don't know what the real story is, and it's pretty irrelevant to the grand scheme of things. So I'll move on to pointing out that also on Sunday, March 31st, Skabushka put out a final quarter one Model 3 production estimate, and he estimated between his, I guess, midpoint estimate was 56,000, and he would believe up to 58.5 thousand Model 3s produced in quarter one. And the actual number turned out to be 62,950, according to the 8K that came out on April 3rd. So Skabushka's estimate was quite close to being correct. So that'll do it for the March Madness stuff. Just a few more items that I'll mention here. So as of, I believe it was Saturday, almost 2 weeks ago, just before the Autonomy Day on Monday, April 22nd, Tesla had sought a temporary restraining order against Skabushka from Twitter. And following that temporary restraining order, Montana Skeptic, who I've interviewed on a prior episode of this podcast, organized a GoFundMe campaign. And so far it's raised, I think, almost $120,000 to help with Skabushka's legal fees. And there was the attorney that Skabushka has hired put out something earlier this week which I haven't actually gotten a chance to read yet, but apparently if they're able to get discovery against Tesla, there could be some interesting things that are discovered. To the best of my understanding, I don't think the restraining order has actually been served to Skabushka, so we'll see what happens with that. The judge, I think, replied very quickly to Skabushka's attorney, and I think there's something coming up on May 21st related to that matter. So we'll see what happens with that. With this big news of the capital raise by Tesla, I think it's very important for those of us in the Tesla Q community to buckle in and pace ourselves, as it's going to be at least 5 months longer than it otherwise would have been with this saga. So for me, with this podcast, I'm going to have to find a good sustainable pace to maintain. I will continue making episodes. Hopefully I'll get an interview again soon. Maybe somebody talking about the apparent business model pivot, or the alleged business model pivot that Tesla is currently undergoing. Definitely will need to have somebody who's more well-versed in autopilot and driver assist technologies on the show sometime, as that's a key component to the Tesla story from here on out. And glad to have this March Madness series over. I kind of feel like I boxed myself in and didn't allow myself the freedom to just do the podcast as I had originally intended. So I'll have some shorter episodes more frequently, hopefully, in the near future, other than interview episodes. And when I do have interviews, maybe I'll have like a special bonus section that's only for patrons. So we'll see about that. So if you want to become a patron, that's patreon.com/TeslaQpodcast. Or if you want to make a one-time contribution, you could still go to the Square Cash app, and you can reach that at cash.me/TeslaQpodcast. And if you want shorty merchandise, you can go to evacuationboy.com and search for that there. Thanks again to Captain Future, who's one of my higher level patrons. And if any other patrons would like a shout out on the show, just let me know and I can make that happen. And with that, we'll call it episode number 29 of the Tesla Q podcast. Buckle up, people. It's going to be another extra 5 months beyond what it could have been, maybe even longer, with this extra $2+ billion of cash in Tesla's coffers. So it's going to take a while for them to burn through all that, but I trust that Elon will maintain his prior business acumen and indeed burn through that cash. So thanks for listening. Bye-bye.